And we are live. Hello, everyone. Welcome to another episode of NFA Live, the first episode of Q3/H2 2026. That went quickly, didn't it? The first half of that year.
Time flies when the market sucks.
That's right.
Exactly. When you're in a bear market, it really flies by. So yes, I'm joined by Ben. Welcome, Ben.
How's it going?
And by Rob. Hello, Rob.
Hello, everybody.
Good to see you guys again. And on a day, actually, one of the questions I was going to ask you guys was around the fact that Bitcoin put in a new low recently, but it's actually come roaring back along with the rest of the market. We're currently around almost $61,500, which is quite a bounce from, I think we tested the 57K range at some point. So things are looking up. Let's hope they'll continue looking up. But we'll talk about all of that. I want to ask you guys a little bit about AI as well, and anything that you've completely changed your mind on this year and why. Before we start, though, anyone watching, if you're not already following Ben and Rob, then there are links in the description of this video. Please hit the follow on both of them. They are well worth it, I promise you. We will kick off now. If you have any questions, by the way, feel free to post them in the comments, and we will try and answer some if we have time, or if we know the answers. If we don't know the answers, then we probably won't try to answer them. Just FYI. So, keep them straightforward. Okay. So, as I said, I'm going to throw this one to Ben, mostly because I'm sure Ben will have a view on this in particular. But so we recently saw a new sort of cycle low for Bitcoin when it dipped into the 57K range. It has rebounded quite strongly now, along with the rest of the market. It's not just confined to Bitcoin, and I think this is partly on the back of sort of weaker jobs data. That I think the non-farm payrolls have just been published early this week because of the 4th of July holiday tomorrow, even though tomorrow is not the 4th of July. So my question to you, Ben, is where do you think we bottom out and when? Or have we already bottomed out, perhaps?
Well, if you throw up my screen, I think I'd say there's a increasing probability here that the kind of the early summer low is in. What's really interesting is we've made the comparison between 2026 and 2018 a few times, also between 2026 and like the 2019 era. But what's really interesting is if you look at the year-to-date ROI of Bitcoin in 2026 compared to 2018, you'll see that the lows occur in sort of like around the same time. Like in you had a low in February of 2018 and then a low in February of 2026. You had a low in a higher low in late March, early April of 2018. The same thing happened over here, right? And then you ended up getting a lower low in late June, early July of 2018. And now that's potentially where we are. What's really interesting is you guys know how we've been finding support at like 60K this year, more or less, right? Around 60K. In 2018, the support we were finding was around 6K. But what's really fascinating is how in 2018, the low that we found in the summer, like in the early part of the summer, was actually around 5,700, 5,743. And in 2026, the low coincidentally is 57,000, right? So again, it's just a 10x move higher. So I would say there's a good chance, you'll see Bitcoin find a little bit of relief for a little while. I mean, I don't think we're necessarily done with the bear market yet. I think that, we still have that 200-day moving average that we got to get through. And by the way, in 2018, we got rejected by the 200-day in May, just like we got rejected in May of 2026. And then the next rejection at the 200-day moving average happened in like late July, early August. So I think there's still a reason to assume that there will be some more weakness later in the year. And the reason for that weakness will likely be on the back of a correction in the stock market, right? Like, I don't think it's going to have to be, it's not like anything specific has to happen in crypto. I think it'll just be a correction on the back of the stock market. And then in that correction, Bitcoin will then put in the market cycle bottom. with that said, I do not think it makes sense to wait for that necessarily to start DCAing Bitcoin. Usually what I do is I just start buying Bitcoin in the second half of midterm years and, just kind of buy it through. And usually you end up getting pretty close to the low, right? So I think that's the argument here. The goal was just to avoid a lot of the losses in the first half of the midterm year with relative to other assets in the space, or sorry, with other relative to other asset classes. But we've had the midterm year, half of it play out. Bitcoin's underperformed. Probably will get a small bounce before showing a little bit more weakness again later in the year, and then hopefully we're back in business next year. And if you look at the ROI from the low, and then as measured from low to low, you could see we're currently on day 1331, and the last two cycles bottomed in about 100 days, right? So in about 3 months. And that doesn't mean that the price has to necessarily go that much lower. But if you're thinking about like when, like time, I would expect sometime like later this year, like late September, October, could be later Q4, but I don't think it's going to be that much later. That's what I would guess as to how this is going to play out. And I think we'll have a little bit more time to accumulate it at low prices.
Okay, good to know. And I guess, in terms of the rally that we're seeing at the moment, I mean, as I alluded to earlier, we had that jobs data that came in soft. We have had a bit of a rally in stocks, but there doesn't seem to be anything sort of, particularly fundamental other than that to suggest that, that this is a reversal, is it? I mean, conditions are still pretty tough for risk assets.
Well, stocks, I think, are still fine. I think the issue right now is that, you saw the catalyst for the higher rates go away. Like oil has come back down, but we're still pricing in rate hikes for whatever reason, right? Mm-hmm. So, I think that might continue to be a headwind for Bitcoin. But I think right now they're actually expected to raise rates in September. I don't know if that's true, but the last time I looked, I think that would be when potentially the next rate hike would be. I mean, that might be the perfect sort of narrative for people to freak out, and then for then Bitcoin to sort of bottom out fairly shortly after that rate hike. So, I think the 4-year cycle remains intact. And if you look at the performance so far this year and compare it to the average of prior midterm years, it looks the same, right? Like it really does look pretty much the same as the average of prior midterm years. And if you throw up every single midterm year of 2014, 2018, and 2022, you can see we're outperforming 2018 and 2022 and underperforming 2014. So, and by the way, in 2014, you can see we had a little bit of a rally around this time, and then we fell and then put in a low in October. So I think that the 4-year cycle remains intact. And I know it's kind of a meme for a lot of people, but the reality is I feel like it's the best thing we have. Like I can't find any other indicators that have been more helpful than just assuming that Bitcoin bottoms and tops in sort of this normal cadence that has become somewhat predictable. Like I don't control it. We're just observers of it, right? We're observing that this is what happens. And until it stops happening, I will continue to speculate that it will happen.
Can I just confirm that, Ben? Did you say you don't control the 4-year cycle?
That's true. I don't.
What? Why?
By the way, I mean, the 4-year cycle tells you when lows occur, and lows occur in midterm years normally. Yes, in 2015, it technically occurred in January of 2015 and not the end of 2014. But I would say it tells you when it occurs within a few months, like within a few months.
Yeah. Interesting. And of course, those midterms coming up in November, that throws an interesting curveball into the mix, doesn't it? I mean, you do wonder, given all the talk about how Trump has done very well out of crypto. Thank you very much. That's been, certainly in the media recently. I wonder whether a crypto rally sort of starting just before the midterms would be seen as sort of good or bad for Trump's cause in that case, because on one thing he wants markets to pump. Any incumbent president wants to see markets pumping into an election, but maybe he'd prefer it if there wasn't much talk about crypto at that time, given how much how much he's made from it. Rob, is there anything you want to add to this one before we move on?
No, I just say it's interesting, like what Ben talked about, and he actually did a video yesterday. I think it was called the Matrix. We're in the Matrix, and it's amazing how things line up, just like how it was pretty much put there. And then when he said about the 10x, I think that's like the bigger thing, because right now, if you're somebody who sold and took some profits, you want these lower prices. You are really wanting things to go lower. And that even includes Michael Saylor, because he sold too, never forget. So like these things that are happening right now, this is the time to actually be excited about it if you've actually taken profits. If you haven't, as time goes on, I think you'll be okay. But I will just say, just to piggyback one thing, if you could throw up the screen, is as we go through this, people say this is a brutal bear market. It's really not. And Ben touched on this a little bit, but if you just go back 4 years, July 2nd, 2022, we were down 71% at this point, as opposed to right now, July 2nd, 2026. We're only down 50. I say it like it's not a big thing, but we're only down 51% versus 71%. So as far as like diminishing returns, yeah, it's there. But as far as like volatility going down, it's still there, but it's not as bad as it was. And I was through this in 2018. Well, actually, all of us were through this in 2018, 2022, and now 2026. I think that, there's better chances ahead, but just realize where you're at. It's not that bad. And it'll probably go lower. We'll see.
Yeah, let's see. And of course, we are kind of getting towards that summer lull as well, when markets people tend to switch off a little bit, and markets tend to sort of chop sideways. So that, I think, is something worth bearing in mind as well. I just have to throw out this comment here because I'm really enjoyed this one. Ben doesn't control the 4-year cycle; he just enforces it.
That's true.
Yeah,
I don't control that alts bleed to Bitcoin. I just enforce that they do.
Yeah, not according to the people on X. People on X are like, no, Ben controls everything, and we hate him for it.
Oh, Ben, speaking of controversial, there was this comment as well. Greetings from Bosnia. It was a red card. So I read the word. Congrats.
My only argument is that if it's a red card for the US, why was it not a red card for Messi when he basically did the same thing? That's the only argument, right? The US's biggest mistake was just that they don't have Messi, because I think if that had been Messi, it wouldn't have been a red card. I say this, by the way, as a big Messi fan. I love watching Messi play. But I just think that it wasn't a very consistent call, right? Because there's been actually a lot of tackles like that throughout the whole World Cup, and they were not red cards. So if those were not red cards, why is this a red card? I don't know. I mean, you could argue, well, they should start getting it right at some point, but it just feels like the US was unfairly punished. And also, like, I know that red cards don't necessarily have to be like intent, I guess. Like you could really hurt someone inadvertently and it'd be a red card, but it did not really seem at all like he was trying to do anything. Like he just kind of happened to land on the guy's ankle, which could, by the way, be a season-ending injury for that player. So I do recognize the severity of it. I just think it really sucks that it was called on the U.S. player and then it wasn't called on basically any other players that have done that same type of tackle in the World Cup.
I love it, Ben. We could do hours on the World Cup, I think.
By the way, I watched the England match. I was nervous for England there at the end, but then your boy Kane came through in the end.
Harry Kane, yeah. It was in many ways a kind of classic England performance. I thought it was just like, it just looked very ordinary for the first half at least. But we found a way through, and now Mexico in that stadium, which I think is at altitude. So small task there.
By the way, NFA stands for not football advice.
Yes. Okay, that was our football segment. Maybe we'll come back to it. But
we can have a soccer segment later.
Well, whatever soccer is, I'm not familiar with that term. But yes, congratulations to
you guys. You guys invented it, so I'm surprised you're not familiar with it.
Okay, let's move on. I want to talk about the AI trade because there seems to be a lot of talk about the open source models coming out of China that appear to be rapidly catching up with the frontier labs, you know, your OpenAIs, your Claudes, what have you. So, Rob, I'm going to throw this one to you because I know that you are deep into the whole AI thing. Ben has obviously harnessed the power of it for his thumbnails, but Rob, I know you've done quite a lot with AI. So, firstly, what are your thoughts on this, on these Chinese models coming through, and have you used them, or are you sticking with your good old made in America ones?
Well, I mean, I'll say like this: Chinese models scare me, and you know, people will say, "Oh, just throw it on your computer and do whatever it wants to." But there was this interview yesterday. I don't know if you can throw this up. This is Palantir's CEO, Alex Karp. And what he said, and I think this is going to really factor in to Anthropic and OpenAI as they go public. I think that's in Q3. But just listen, this is about 2 minutes or so, but I think it's important that people understand what's really going on with AI in the background and why Guy brings this point up as far as like a private LLM. And I think it's more important than I realized. Let me play this and see if there's any echo.
Using large language models, at this point, everyone technical realizes they're like a critical resource. To make them valuable in an enterprise like battlefield context or regulated context or manufacturing, you have to have what's called an application layer. And we have this thing called ontology that now everyone's copying. But de facto, it takes a large language model. It makes it safe and useful and precise. So safe because it doesn't touch your underlying data, safe because it prevents the large language model from caching your data and replicating your business, safe because it doesn't transfer your IP of how to fight, secret data, top secret data, or in a clinical context. So the general way these things were sold, and again, these people are, Sam and Dario, there's nothing more fun than debating Dario in private. So I'm not throwing shade at them, but something has gone completely wrong. And the basic view among enterprises in this country is I'm going to chillax and waste my time with tokens. I'm going to get no value, and they're going to get my IP. Now
that sounds like shade. Okay, though. And not just shade. It sounds like if you're saying these.
No. Sorry. This is reporting. Okay. And this is reporting that I've literally, against my own interest, called. These are like, I'm profiting from this, right? So the reality is, you may not like us at my former school, Haverford or Berkeley, but enterprises in this country trust and love us, especially ones that are involved in critical infrastructure, both public and private.
So that was the big thing. Essentially, what he's saying is like, and I think Ben brought this up a couple of months ago, where he talked about pristine data 2022 before, as opposed to the AI data that's being brought in now. And the AI data that we have, or that is being produced, is essentially these huge corporations, which would be Anthropic and OpenAI, and they're taking this data and essentially going, oh, okay, we're going to take all this data that you have from your companies, and we're going to essentially put it into our LLM. And then if you think about it, like, what stops them from producing all these software as a service, or just eliminating software as a service because they have all of their IP? So when I take a look at this, I'm like, well, that's just big corporations. What are they doing with my data that's being out there? And how fast can that actually go out? So there's been a lot of people talking about, like, you don't want to do that, especially like there's things that I don't want the OpenAI and Anthropic to have, but they have it already because I've been using Claude so much. I think we all have. And who knows how much is being scavenged in the background. So when people talk about this, they're like, you know, you should do a private LLM. And here's the thing. With private LLMs, these different ones that Guy just brought up, if you can do it, and you can find this at artificialanalysis.ai, the question is like, well, the ones that are open source, which I don't know why they don't do open source right now. I mean, Meta does it. Works out pretty well for Meta. Microsoft does open source, and Google does open source. So why can't they do it with the open source LLMs? But if they do like this with intelligence, I mean, look how, as far as like benchmarks, Claude Fable 5, which was the one that actually broke in and cracked the top secret data from the Department of Defense. And it didn't take days, it took hours. So that's at a 60. GPT-5 is around 55, GLM 5.2, 51, and then this one, Gemini 3.5 Flash from Google, is, you know, at 50. But the ones that you can actually have, like this one that Guy referenced, this DeepSeek and stuff like that, they're not that bad. And you can actually use them and run them on your computer. Same thing with speed. You can see it's not as like the fastest, but it's still pretty fast. DeepSeek, Minimax, stuff like that. And then the cost is the big thing. And there are people that, and he talked about that, about burning through tokens. Uber burned through their entire $1 billion budget in 4 months, and they had to actually stop in April. So these guys are making a ton of money. They are taking all this IP, and who knows what they're actually doing with it. So like people that are sitting there watching this, I think it would be a pretty big thing just to be on your own private LLM. How hard is that? It's a pain in the ass. I got to tell you, like for me, like I did a one with OpenClaw, and that did not work whatsoever for me. And I know people are like, oh, it was super easy. Well, I'm not a developer and I don't know CLI, command line interface and stuff like that. It's a pain. I did this with Hermes on a separate one, not so well. I think there's going to come a time when we're able to do that, and just with like using like a Mac Mini for like $600, you can do it. So I can see it, but I'm still using Claude right now. I'm saying all that, but I would like to transition to a private LLM. I think that's the big thing, because you don't have to pay so much, and then you actually control your data, which I think is a big thing, especially if you're in crypto. So yeah, that's how I see it.
Yeah. Interesting. And I mean, one of the things that I've been thinking about a lot recently is just how, we really do seem to be in a bit of a honeymoon phase when it comes to AI use because of these subsidized tokens. The searches that we're running, the tasks that we're doing with, say, with Claude or with GPT or whatever, those are actually costing a lot more than we're actually paying. Even if we're paying sort of top dollar, even if we're paying the sort of business subscription, the cost of those searches, the cost of that work is being subsidized by the companies. And something I've been wondering about is what happens when that comes to an end. What is that going to look like? Because the investors in the likes of Anthropic and OpenAI are going to start wanting a return on that investment before too long. And they're going to have to become profitable given the vast amounts of money that's been sunk into it. So, yeah, I do, and I guess the Chinese models become particularly relevant there, because if there is a cheaper way of doing it, if Anthropic and OpenAI and all the others are sort of forced to jack up their prices, then and China can undercut them, then that's going to be huge, right?
Yeah, it's going to be huge, and we're going to see who wins that battle. But again, like I think if you want to keep America in the forefront, you have to subsidize. And again, I think they should just make it an open model, go from there.
Yeah. Enjoy the free tokens while you have them, folks, because I think we will look back on this time in not too long a period and just go, wow, I can't believe I was just able to, spend all day on Claude, just asking it to do stuff and research stuff, and it would just come out with all this. I really think we will look back on that fairly soon and go, those were the good times. Now you do it and you just see your token bill racking up. Of course, if you're familiar with the doctrine of inshitification, this idea that all tech products degrade over time once they've attracted their users and stuff. Why shouldn't that happen to these LLMs that we're so fond of? But yeah, food for thought. Okay, let's move on. I want to talk a bit about what's happening in the macro space as well. The yen just broke through a 40-year high. The dollar is breaking through 16-month highs. So is there anything that you guys see that's particularly driving these moves, and what do you think it means for the markets? Ben, can I go to you on this one?
Sure. I actually have an interesting chart. If I had been thinking about it, I would have found it while you guys were talking, but I was
mesmerized. I know, Ben. I know.
I was on Twitter looking at everyone complaining about the red card. All right.
Good to know you're present in the conversation, Ben. I love it.
I tweeted out, I quote tweeted this as not football advice. I'm just promoting the stream. All right, let me share my screen.
Okay.
Okay, so this is the dollar in Trump's second term right now, right? Mm-hmm. And this, we just added this to the website not long ago. And this is the dollar in his first term. So it's basically just doing the same thing, right? And this is what I've said. I'm like, the dollar begrudgingly will go higher in the midterm year. Even though they probably would want it to go lower, it's probably just going to begrudgingly go higher. And I don't necessarily know what the catalyst is or the narrative is or whatever. I just think the dollar is going to go higher. And that'll probably be a headwind for crypto later in the year. But then as it kind of starts to top out, like later in the year, where you can see kind of in the following year, it only barely goes higher. That will be the bull case for Bitcoin. The short-term bear case for like the next 3 or 4 months, notwithstanding a counter rally in the short term, but it is that the dollar will simply continue to slowly climb, and then once we get into next year, the dollar's climb will probably be mostly over for the most part, and that would be like a bull case. But I don't really know what the narratives are going to be to accompany it. I just think that's the most likely outcome.
Okay. And of course, yeah, there's a lot of talk about the yen as well, isn't there? Because the Bank of Japan sort of trying to defend that, and obviously, if that's their rates are now at, I think it's a 30 or 40 year high, and we've seen this in the not too distant past, haven't we? The yen carry trade unwound, was it a couple of years ago now, and that caused a big dip in risk assets, and we could be looking at that again if Japanese rates rise still further, which they very well might.
Yeah, they just raised rates actually, like last month, right?
Yeah. It's that I think is a big overhang. I think that's a big overhang for risk assets in general, but of course, crypto is always the one that catches it first. So I think that's something to be wary of. Okay, and one last question for you guys. I'll go to you first on this one, Rob, and then Ben. What's one thing you've completely changed your mind on this year, and why, if anything, of course?
If anything, it's all this. No, not really. The same thing that the chart that we went through, if you can throw it up, is that these bear markets aren't as bad as people think they are. And it feels a lot better when you've actually taken some profits off the table, because now you're like, this feels pretty good. So that'd be one of the things. The second thing is dogs are the greatest thing ever. And this is for the Venezuela earthquakes, which were awful. I think over 1,000 people have passed away. But dogs, like people mistreat them, and they're like and they put them in cages. But then when they have to like save our lives, they're always there. They're like the greatest thing, and this is like cements it. On top of that, insider information is not so bad, because I hear on good authority, as far as like from Polymarket, that guy may actually show up at the ITC conference. Now we're at 72%. And this is just from some insider information that I got. So those are the three things that have changed my mind. It looks like Guy might actually be in Miami in November.
Interesting. Where are you getting this information from, Rob? Or can you not disclose your sources?
It's a source that rhymes with BIC, but who knows? I don't know.
Okay. Interesting. Okay. There's the alpha for you folks. if you want to go to Polymarket. Ben, anything that you've changed your mind on this year at all?
There was a few things I feel like early in the year. I think I thought previously that energy would have stayed a little bit more elevated at this point, but we know the geopolitical conflict kind of waning a lot. We saw energy come back down quite a bit, like oil's trading back down to like $70 or less than $70 again. So I'm trying to think of some other things. I think in terms of other stuff, like I think some things will never change in the industry, in the sense that like even earlier this year, I was somewhat confident that like a lot of these meme coins were just going to completely die out. And while I still think that's true, I mean, I saw one launched a few days ago that has gone up a ton, and I'm just like, how are we still doing this? So it's kind of a reminder that the gambling addicts are always going to be there in the industry, and that I don't know, maybe there's nothing. Maybe that part of the industry will just simply always be there, despite my best efforts to get it to not be.
No one can say, Ben, that you haven't tried.
I've tried.
They just won't listen. Okay, let me just see if there are any particular comments I want to single out. Guy, looks like the BTC price. Thanks.
A little disheveled, but staying strong. That's what it is.
Yeah, well, just you come back and say that in a year's time. Ben, we got robbed on that red. There's a lot of red card stuff, Ben. I don't want to.
We did get robbed on it. And by the way, I will say this: in prior World Cups, after that, the U.S. would have completely crumbled. I'm really excited that they were able to hold on and even get another goal after that.
Yeah. So who are you playing next? Do you know?
Belgium. We were gonna. You know what's crazy is I thought we were going to be playing Senegal next. And I actually went to the U.S.-Senegal warm-up match like a month ago or whatever. And Senegal was up 2-0 with like barely any time to play. And then Belgium scores 2 goals, sends it into extra time, and then they got a 3rd goal on a penalty kick. And the penalty kick occurred in like the last minute of stoppage time, which that was also a controversial call as well.
There we are. The magic of football. Now, actually, while I've got you guys, this is a theory that is very popular, or has been very popular in the UK for a long time, because we've always sort of been a bit baffled why most Americans, not you, Ben, but most Americans have never really sort of embraced football. And there's a theory that you guys never could quite get your head around a game that you could play for 90 minutes and still have a draw, still have a tie. Is that actually true? Or is because I know, you watch things like basketball or American football or whatever, and they're big scoring things, aren't they? It's very, I don't know if you can tie in basketball or American football, but just that the number of points makes it quite unlikely. So is that true? Were you guys always like, this is nonsense? Why play something that could finish with neither team winning?
I mean, I never thought that. I always thought I think you could have a score that's 0-0 and it still be one of them a really exciting game. I think it's a fairly low IQ take for people to be like, oh, you have to have like a massive run up in score for it to be an interesting game. Like you can have a really interesting game with it being really low scoring. Also, I will say again that there's more Americans that probably are interested because the population of the United States is so high. Relatively, there's a small percentage of the population of the states that care about soccer compared to the overall population. But in terms of absolute numbers, it's not that different from some of the European nations just because we have so many people over here. I think a lot of our star athletes just choose to play other sports. Like they play they play American football, basketball, because that's where all the money is. And that's a big part of it. It's just there's not nearly as much money in I mean, look, soccer was my sport growing up. Like that's what I played, so I'm a little biased towards it, but I do cringe a little bit when I see like the players like flopping on the field and stuff. But we're lying to ourselves if we pretend like that doesn't ever happen. I mean, it happens in the NBA too. Yeah, we see flops happen. I don't think it's as frequent, but it does. I mean, it happens in a lot of sports. Maybe it doesn't happen in hockey that much. Those guys are pretty tough. Those guys get checked really hard and they get back up like nothing happened. They'll be out there without teeth and they'll still be going.
I remember being amazed to learn that there was actually a game being played on the hockey field. I thought it was just guys fighting. I was quite surprised it was actually an object to the game. Bren is saying that I think that's a roundabout way of me saying that Americans are very stupid. Not true, Bren, not true. I'm just I was just thinking, like I say, this is a common sort of thing in the UK, that maybe the fact that Americans never really embraced football like they have everything else is because they just don't like draw. I think that's a good thing. Okay, and there was another one that I wanted to, another comment that I wanted to highlight as well, because it is, Tom Crown has a new rule. If you're on the ground for more than 10 seconds, you're out for the rest of the game. This is what America can bring to football, I think. I like that. Unless, of course,
I will say I don't agree with all the Americans being like offsides is a dumb rule. Offsides is a smart rule, because if you didn't have it, you would literally just have the striker camping out by the goal the whole game. Yeah. The only thing I would maybe change about it is sometimes I wish that the offside rule, like maybe the player, as long as part of their body is in line with the last defender, they're still onside. But it's like it's like their toe could be ahead of them and it's offside. Like I think maybe that could be a little bit different, but we have to have offsides as a rule in general. Because if you didn't, you would just have campers on the other side of the field the whole game.
Yeah, absolutely, absolutely. And I'm here for this comment as well. We need Ben's live commentary on the game. I mean, I think this is the bear market. If we're not at the bottom, we're probably quite near it. Maybe we just switch. Football podcasting is big business. I can tell you that. And I tell you what else is going to be big business as well. And that's the ITC conference 2026. Ben, before we finish the stream, can you just remind people when that is happening, where, why, how?
November 20th through the 22nd in Miami, and yeah, we're going to try to have a lot of speakers. We're going to have an ITC party, so that'll be fun. We're going to do a lot of stuff. And basically, it's more of like an investing conference. Bitcoin will be a major theme, obviously, but it's not going to just be treasury companies on stage, like talking their talk that no one really cares about. And yeah, we're going to have hopefully like very, very good discussions.
Excellent. And Tom himself is one of the speakers, right?
Yep, Tom will be there.
Fantastic. All right. Okay, everyone. Well, we've gone slightly over the half an hour that we were going to do. So Ben and Rob, I'm going to let you go. Thank you very much, gentlemen. Next week we will be on Ben's channel. That's right, if I remember right.
Right. Yep.
I'm actually away next week, so it might be Nick in my stead. So you'll actually get some proper insights for a change. But I will be back soon. So have a good week, everyone. Thank you for watching and see you soon. Adios.
See you guys.
Adios.